Good morning, good morning, good morning, my neighbors. How you doing? Welcome to another analysis from Before You Take the Trade. All right, go ahead and click the link down below. Subscribe and the bell button will let you know when I am online. Also, my Instagram and Twitter is down below at JD underscore the great. If you don't have a trading community and you want to be able to learn how to trade it the best, I could tell you come over to Cheat Code. We are always doing live trading floors and we always drop in as much gems as possible. All right, so let's go ahead and get this started. I'm not going to be on long. Let me see. Now I got my arm all doggone mic arm all into the camera. Whatever. All right, so let's just go ahead and get to it. The market has been very interesting. Oh, I don't even have my audio playing in the background. Let's get my audio, my theme music. All right, let's go ahead and take a peek. So you can kind of see with the market's been a little over. Let me just fix these up. All right, so natural gas is looking a little bearish. Gold is looking a little bearish. The NQ kind of dropped, but it recovered kind of well. And you can see with the Russells, it's coming up to the 50 EMA. It's looking like we're just having a nice little smorgasbord of a type of setup on the charts. So first thing I want to go ahead and talk about is the NASDAQ. The NASDAQ has been doing some interesting things. Like I said, we kind of broke through some of the upward trend lines. We can see it right here as you are starting to notice that the NASDAQ went ahead, had an uptrend, had a potential uptrend, tried to hold it, couldn't hold it, and now we're starting to break down. So we got ourselves what looks like a potential downtrend with an actual downtrend. So we got this one right here. That is our downtrend. And then we got ourselves actually let me tweak that for y'all. This is our downtrend. And then we got ourselves what looks like a couple of deviations of that downtrend. We got this one right here. And then this one is going to be what I consider a potential downtrend for the most part. All right, boom. So I think they're going to try to retrace this probably about to this level. Look for a rejection somewhere around 16,900 and probably continue to that downside. All right, so that's what I'm probably going to keep my eye out on NQ coming throughout today. Let's look at oil. All right, so oil has been doing something that's been fun. I wanted to see it a long time ago under the $70 mark, but it just keeps on bouncing. It keeps on finding life, keeps on continuing, keeps on fighting, and I'm not too happy about that. But that's okay, because the market's going to do whatever it wants to. Kind of looks like a bear flag if we kind of look at this, the way it's trying to break it down. Hey, what's going on, Hitch? Long time no see. Absolutely, I got you. U.S. banks and you already know my baby SoFi. Got to check that one out. All right, so let's just dig deep into oil. You'll see that we had a nice little retracement into the alt order block. This is a very old order block off of a fair value imbalance right around this area here, and it looks like we just keep on coming back and revisiting. So I would say for the most part, look for this to be possibly a bear flag fell, because this kind of looks like an inverse head and shoulder. For those that don't see it, let me break it down for you so you can kind of see it. Looks like we're doing this. This is the shoulder, this is the head, kind of janky, and then here's your other shoulder. So we could get a nice little extension out of that. What type of extension? We do measured moves about right here. This is our breakout, and it looks like it's retracing into the breakout. Let's just get 50% of the move. We're not trying to get all of it because we're not greedy. Over at Chico, we are not greedy. So I'm thinking probably around this level, 73.85, is what the market is looking to go. All right, so just keep that in mind. The next one we're going to go ahead and break down. It is gold. So gold has been doing some fun stuff. I told you, I warned y'all well ahead. I said, listen, I understand y'all like this whole entire 2150 and you want to see it get up there. Listen, 2150, I actually played this trade. It got up there really fast and it got down just as fast. All right, so I'm looking for really key levels of support before I even try to attack that 2150. If we go right into the chart real deep, you'll see that I gave y'all a couple of levels. I said possibility A was this level, possible rejection. You've seen how tough it was. Possible B was this imbalance that was forming over here. And then the third one was a reach. But you could see this wick right here on December 28th was that tight little reach that he tried to get to. Now, I thought we was just gonna slap gold all the way back down to the order block, maybe around 2000, somewhere, anywhere, but not where it is right now. We're starting to form key levels of support, especially using the 50 EMA as that level of support. So look for bearish below 2042, sorry, 2024, and oh, how ironic, we're in the year 2024. Bearish under 2024, and let me put that there, and bullish anything above this wick right here, 2063. I know it's pretty wide. I do apologize because it is pretty wide, but this is the only way I'm going to take this serious, for them to try to reattack these imbalances that they place, and we've yet to actually challenge this imbalance. I know you're like, well, JD, what do you mean that imbalance? This imbalance, I want to say I built it on the 1 hour. I should start writing notes on what I built these imbalances on. Let's see. Yep, roughly the 1 hour. So when we had this drop, nice clear balance here, nice retracement here, coming into here, but then we kind of did this consolidation here. This is that imbalance. This is what I'm looking for. Somewhere around this level, it's going to get retested. It might not be today, it might not be next year, it might be 2, 3, 4 years later, but at the end of the day, this little space right here needs to be tested to see if these shorters are still there. As you notice, we kind of pushed down to here, and here. And what did we do after we pushed down? We came back to retest those areas. Retested it here, but we've yet to really retest that one. So that's the one that I'm very curious about. So if there was going to be a potential uptrend, this uptrend has been broken. That's this one here. That was the one that was supposed to take us up there. That's broken. And right now we got this downtrend that needs to find a place of reversal. This is an official downtrend right here. And then we got ourselves a deviation of that downtrend that's pointing like this. So depending on how they treat this imbalance here that has the support, we may find some support maybe around this level. That's why I said bearish. If we break under here, we'll shake off some imbalances, fill some other ones, and really put some pressure on that 2000 mark. All right. Silver, on the other hand, kind of looks very similar to how gold is looking. Right, we have our nice little uptrend, try to get up there, but we're coming from the downtrend after that major move that we went parabolic and went crazy, right? And then we got ourselves the uptrends that's just forcing, trying to find ways to get support. Now, silver is a very, very interesting commodity. It sometimes lead gold, it sometimes is trailed by gold. So if gold starts to fail, it starts to put weight on silver. So I would say just chart it out. I don't suggest you trading it here because we're inside of an imbalance that I've been looking at, and you can see we keep rejecting at the 50% of that imbalance. So I would say if this right here, again, just similar, just like how gold is, if this one does not hold this imbalance and they fill this one, we're probably going to test under 2266. All right. So now the next one is the British pound. The British pound, you already know how it goes. When we go up, they go up. When we go down, they go down. And right now it has been going down, finding a little bit of a balance, which if you look right here on NQ, bring that back, it looks very similar as far as how the candles are, because at the end of the day, the way NQ is moving above that 200 is the way we're kind of bouncing off this trend line on the British pound. So looking deep into this British pound, you could see we've touched this area. So this is a very strong demand area. I want to see us try to break through without it really affecting any of these imbalances here. I would say the farthest I want to see it pull back, let me put a fib, no more than 50%. I don't want to see it get to the golden ratio, because if it gets into this golden zone, there is a possibility of reversal, and we're probably going to continue to that upside. All right, so that is the British pound. Let's go into natural gas. Again, I am completely upset at myself on natural gas. I could have did a whole lot better as far as following this, but if we break this chart all the way down, it has destroyed some downtrends, and right now we're in this uptrend. So what I'm going to do to kind of clean this up for all of y'all, I'm going to go ahead and shed a tear and say bye-bye to my mistake of not taking this trade. I want to go ahead and redraw these lines and give y'all a little bit of an idea of what I think natural gas is trying to do. All right. So if we kind of zoom in here, we got a nice uptrend here. Let me get my extension one. Nice uptrend here. That looks really, really strong. I might want to start doing some templates on this one too. Actually, bear with me. Let me turn this one blue. Kind of follow my same setup for my uptrend. And let me save this. Uptrend. I'll clean it up a little bit better and put uptrend, downtrend, and all that. I don't know if I'm gonna put potential uptrend, and I doubt it. I think I'll use regular trend lines for that because it's gonna be more short term. But I think this is gonna be a long term uptrend. Have a nice little pivot right here. Actually, I'm gonna fix that pivot right there. You got a nice little point right about here. We're touching this area right here. We'll grab that. That's our uptrend. And if we look a little bit more into this, it looks like we got even more of an uptrend. That one looks like it. I don't like it. Too shallow. So I'm going to just redo that one. I'm going to start it from here. And I'm going to consider this one. I think this was a higher high. No, actually it was not a higher high. Okay. So we had a nice little boom, boom. Okay. I want to capture this. So I'm going to treat this as an anomaly only because I want to capture that. So I'm going to look at it as this. I'm going to use this point and use this as manipulation. They just kind of stopped everybody out to get to there. And then I'm going to use this as the uptrend. And now we got a potential uptrend that got broken right about here, especially when we're close to that contract expiration. I believe that's it. No, that's not contract expiration. Let me see when this is contract expiration. That is here on the 29th. Okay, so we got some time. We got some time on natural gas. All right, so now we kind of have our levels. We kind of have our lines, right? So now what am I expecting from natural gas at this point? I am looking, okay, really? Natural gas in the medical phone. It is actually a great observation on that. I do like that because we're getting higher highs here and making lower lows after what should have been a bear flag breakout. I do like that. I thought of that as well. The only reason I'm kind of ignoring it a little bit is because I'm looking at the short term. So I'm kind of looking for, what does this mean, right? Could this be a double bottom over here and they're going to continue up? That's a possibility, but it needs to get out of this high. We're about to go into the summer, so I think this is where its resistance is. So that is a very, very good observation on that megaphone pattern. I like that one. But generally speaking, with the lines I just put in, right now we're in an uptrend with a retracement and test, and I think they're going to come test this line. If this starts to break through, we're probably going to go break all the way through, and then your megaphone pattern extension should play out from your daily, which would be, for those that don't know, you want to go ahead and get that megaphone pattern. This is the measure move for the megaphone pattern from here to here. And what do? We are looking for 50% of the move, which is roughly about, right? Oh, actually, I did that wrong. Gotta move it first. Bear with me. Right, so if we actually break out, I'm thinking the breakout is going to be below this trend line. It needs to break all these retracements and everything else somewhere around that ballpark. We're going to get 50% of the move. So hypothetically speaking, and this is very speculative, this is probably the most speculative I can get because we haven't broke the uptrend. This can just continue on this uptrend. EU winter, yes, I know it can spill over because I got a couple of clients of mine that actually stay over in Hungary, and they tell me how the winters kind of spill over to spring and summer's pretty short around there. So that is a possibility if we're exporting, but I want to see 50% of the move roughly around here. That's the question mark right there. Are we going to get to that level after we break through? So that would be my target if we continue this downtrend and break what looks like this uptrend. That means we have to break this low also. So I think we're going to retest this area if we keep warming up and we're going into the summer. All right, so we got like 5 months until roughly around summer. All right, so that is natural gas. Let's go ahead and get into the Russell. The Russell, you already know how I use the Russell. The Russell is like my leading indicator of what the market is doing. We try to break through this downtrend, couldn't. They're putting a lot of pressure on this level. So I do think that with the way the Russell is operating, trying to make this double bottom, trying to stay above this order block, if we get through, I would say maybe this 50% mark around 1922, look for the Russell to really start to dump, and that should put some real pressure on the market, because if people are getting out of small caps, they're probably going to protect themselves from the major caps because they have that global footprint on them, right? So just keep an eye on the Russell. If this actually does what I think it's going to do, you're talking about Russell breaking out of 1900 somewhere around the end of the month, around January going into February. So keep in mind, we'll probably look at this later on and put a vertical line right here, and we'll get an idea there. All right, so that is the Russell. The last one is the dollar. So the dollar has been doing its thing. What did I say to y'all? I warned y'all. I knew it was ugly. I knew there was a possibility, but this looks like an inverse head and shoulder right here. This right shoulder, they try to break it as much as they can. I wrote some markers here. Kiss of death rejection right here. They try to dump it. It just could not make lower lows, and if it fails to make lower lows, you have to take it for a grain of salt of what it's trying to do. So at this point, I think we're going to get the measure move on the dollar, which is going to dump the market. So let's go ahead and measure that out. I think I've done it already, but I'm going to go ahead and test myself. So got a nice little breakout here, assuming that the breakout would be at this level. We're talking about 50% of the mark. I guess I did not put the levels, so good thing we're going through this again. 50% of the mark, I'm looking for the dollar to get to 103. If the dollar gets to 103, we're talking about a good dump of the market, a good retracement inside of this imbalance right here, filling that fair value, and then we could probably test some of these levels here around that 104, 102. So that is how the dollar is looking. Oh, really? It is? Oh my God. Okay, I've been trying to tweak this, because you know what annoys me about OBS is that I cannot have my music stay on between scenes. So OBS, if there's anything that you could do, is that better, Hitch? Let me know if that works out. If there's one thing that you could add, is a source for the whole entire show versus source per scene. But I digress. We'll leave that alone. Let's go ahead and come back out. By all means, if you want to, go ahead and send me a message. Put whatever tickers you want me to pull up. Looks like Hitch wants me to check out US Banks and SoFi. I will put it against the cheat code algo, get some levels, get some entries, and then we kind of run the gamut when it's all said and done. So by all means, this is a show that does require some participation. The only way you're going to get information is when the squeaky wheel gets the oil. Okay, so right now, Hitch is doing a lot of squeaking. All right, let's go ahead and get into the chart. Let me pull my other chart. Where are you, bad boy? Let's see. I put you. I don't think I put you there. I think I put you over here. Yep, that is you. Okay. Here we go. Let me get rid of my alerts and let us look at US Banks. For this one, let's do this fun. Like, I'll look at the XLF. XLF is the ETF that actually tracks the banks as a whole. Let's look at it from a daily perspective. And where is the algo? Okay, there goes my levels. Right. So here's what I noticed, and that's why I was gonna play banks, but I played banks during when did I do it? I think I played the banks during, I want to say November going into December. I played City. City was really good run up that it made going into December. I probably could have held it a little bit longer because it did better going into the new year, but I took my money and I ran. Look, I see green, I take green. I'm not gonna let them take it back. But if we look here, XLF tried to make another push up. The cheat code algo pretty much dictates this right here. You could see entry levels at 37.99. We failed to hold above it. We keep using it as resistance. If we look left, this 37.99 is a tough little area built roughly off of this imbalance. And if they gave this up, then they'll probably start to go into this imbalance and then start to take out some levels, maybe retest this gap. So there's a couple of things that's sitting on top of it. So these sellers are probably still a little bit bearish on that position. So coming back over here, I want to see this before I even think of being bullish on any bank. I want to see XLF get above $38 and close with some strength. If we look at the oscillators, it does look like a slow bleed, right? Like they're trying to push it down, but they don't have no momentum to push it down. This can go lower before it goes up, only because the stochastic hasn't crossed back up again. And every time they cross up, it gets smacked. Here's a cross up here, smack. Here's a cross up almost here, smack with a hammer. Cross up here, smack, smack, and smack. And then this is going to be the next cross up. Will it get smacked? We don't know, but we're going to go ahead and keep that in mind. I'm going to put this in my red list just to kind of keep an eye on it. I do have some banks in there. But in this case, I want to also look at, let's do Citi. I like Citi. I like how they're set up. Actually, let me get rid of this drawing. Bye-bye. Okay. Citi missed on their earnings. Oh, Lord. I do not think XLF is going to go above that $38 mark. Let me silence my phone. I really don't think. If you're looking at this chart, look at this. The EPS is not where it needs to be. And then they missed on revenue by 6%. So if I'm an investor, I don't want to hold on to this bag. I will not be surprised when dividends is paid out over here in February 2nd. It's going to dump. So just keep that in mind. That is what I think is going on with Citi. Let's go over to JPM. Let's see if JPM can save the whole entire banking industry. Did they have positive? Ooh, that looks like a red to me. They missed it by 9%. But again, Citi is one animal and JPM is another. JPM is the stronger bank. Hence, they still return money to their shareholders with a positive EPS. But they are not showing any really strength in that industry, being the leader. So I could say banks are in trouble. Let's go ahead and take another peek at another one. Like, let's do Goldman Sachs. Let's see what JPM could be profit taking. That's probably what's happening here. Now that I look at this, right? We've been running on JPM for a long time, being the strength that they are. After 141 that happened at this level, it just had a nice solid uptrend, never came back, and it got to TP4. So that said, this could be just a divergence that's being played out. If you don't know about divergences, this is basically the histogram is lower than this histogram right here. That's your bad boy right there. And then we're making higher highs that whole entire time. So this could be just buying weakness more than complete sell-off. So keep that in mind for JPM. Let's do Goldman Sachs. Goldman Sachs is GS. They have earnings that is going to be announced this morning. They're expected to give 3.6, which is very close to JPM. And you have $10 billion in assets. I know they were trying to get off of the whole Apple partnership that they have. I don't know if they solidified that, so we could find out at this earnings call what happened with that and what are their plans. So right now it does have the MACD pointing down and the stochastic pointing down with a red dot on the CC swing. So this could be continued to that downside. So that said, maybe a rebalance of this whole entire gap that's here. We're at TP4 on the daily. It does not make me have a lot of confidence that it's going to the upside. I think there's more opportunity to the downside just on retracement mode than there is to try to play this to the upside. As you see, this 386 is a tough level to kind of break out of. And then the last one, I'm going to do another smaller one, Bank of America. Bank of America has missed. Again, they're a smaller bank because they only return X amount, which is 35 cents to their shareholders. That said, we look at negative 34% that they missed out on, which is not good, but it's a lot better than Citibank. So I'm pretty sure everybody's probably going to run out of that. And you know the funny thing about it, I got to go back into that. I literally broke down CCJ. Then Casey came on explaining his position on CCJ, and I still didn't jump into CCJ. I am really, really upset that I did not get into CCJ properly. So after I do SoFi, we're going to go ahead and break into that. But yeah, so Bank of America, where it is right now, I do think that there is going to be some rebalancing. You see how this gap happens? That's what I'm looking for Goldman Sachs and also I think it was JPM, right? A nice fill of the gap. See what the market thinks. If it holds its imbalance and it continues up, great. If it doesn't, well, let's just go ahead and consider that they're going to retest the 200 EMA, right? And I don't think they're going to stop, because there's some contracts going on for uranium, because we're probably going to go into what they consider clean energy, as everybody's starting to get into the topic of we need to get a clean energy. At least that's what the administration is talking about. I would say overall, we got contracts that's coming up to nuclear. So nuclear is getting funny again. All right, so let's go into SoFi. My baby, SoFi. All right, so SoFi right now, I love this stock. I just don't love how it trades, because there is a lot of speculation behind it. They do have their bank charter. They do fall under banks. They do have their earnings, which they missed out here, but they have so much growth potential, especially with the loans coming back. I'm expecting them not to return any money to their shareholders again. So this is an investment idea for 20 years plus. This is how I see SoFi. So even though it kind of spiked at $11 roughly around here, and then we had our nice little run in January close to 10 going into that 11, I don't see it getting to 11, but I do believe that we could be rounding off this bottom. Let me draw this out. Get out of there. All right, rounding this out. Where's my rounded? There we go. So assuming that this is the center pivot, roughly around 1049 here, probably a nice little rounding action is being formed right here. That's what I'm thinking is happening. So even though it's not a straight uptrend, I'm thinking people are starting to really believe into SoFi, and it's going to create this action where people are starting to accumulate their position, and it just fails to make lower lows, but it just doesn't really run up. And then out of nowhere in that consolidation, boom, a nice explosion. I do think that they are a $20 stock, but that is just my opinion. This is not financial advice. Please consult your financial advisor, or do your due diligence and actually draw on your chart and do the work, and you'll probably see the same thing that I do. All right, so moving on. As I do my disclaimer in the most rudest way possible. CCJ. This bad boy. Man, we was talking about it. I gotta go look for that video. You know what I'm gonna do? I'm gonna look for the video on when I said it and when Casey brought it in as one of his list of items. CCJ has been looking good. They've been accumulating. I want to say it was a little after October we kind of formed this bottom here. But you're talking about from $34 to now $50. That is a 38% increase. Oh yeah, I'm kicking myself on that one. I seen this thing coming, very much like natural gas. If I knew better, I'd do better. But again, I do a lot of analysis. I look at charts and I look at so many different things. Sometimes I forget to set alerts or go back to my tickers. So my loss is y'all gain if you actually make some notes and, you know, maybe you play CCJ more frequently and more loyal to it. But that said, where does it go here? Again, this is a lot of new speculation. You can see they raised targets because people are analysis. There's got to be one of the news where they were saying that there's new contracts coming in. Flag protection, shortfall. I don't know where it is. You might have to Google it. But they were talking about how there's new contracts coming in where they're looking to go ahead and get deeper into clean energy, and they're considering uranium clean energy. All right, I'll check out our firm right after, and then we'll probably wrap up there because I got to open my floor at 8 a.m. But I like where CCJ is. Let's see if we can try to predict where it goes and do some more fun analysis on this chart. So let's see. We got a weekly chart that looks like this. Looks ridiculous. We got a MACD that's crossing up and a stochastic that's crossing up. I want to see what this momentum does with it. Hold on. We got, this is the weekly. Really? So we cleared this level, 46.76, but there is a gap in there. Maybe, and I'm not saying it is, but I can see possible bull trap in this because we've been so high. If these histograms don't surpass this histogram, I can see this kind of pivoting and falling very aggressively and then starting to come down. So I would say be a little careful on going long. Wait for a pullback for a good entry. We come back over to the daily. You probably could see a solid pullback. Would probably be, yep, you see how I'm right at that level. We couldn't break that level. We gapped it. I want to see it, how it treats 46.76 before I jump into it. If it does it with some respect, start to give that bounce, this back D, stochastic, everything is still continuing to that upside. They could rebalance this whole entire price action. The supporters are still sitting here, and then whatever is this bullish order block would be about right here, and this will be my order block. Let's look at it historically. Really? Oh, over here, 2011. That's the order block. I could probably lower that order block, but if you look at it, we rejected from this area, and right now we're above it. Okay, that said, CCJ, I will stay completely bullish if you can hold my box between $44 and $46. That is my bold prediction. After that, if it gets anywhere under $45, the market's probably going to reverse on CCJ and start to dump. That's what it looks like at this point, because we've done it before. Now let's go into some deeper analysis. Break it down on a weekly again. We already called that order block. All right, nice low momentum down, and then we came to this level. This is actually a higher low from the 2000s. So could this be our levels roughly at 9? And since the golden cross happened on 2021, could this be the angle that they're looking to respect? And if anything, we need to retest this area. All right, so that's one retest. What if we can get another retest and they come in and retest this area? That could be an area there. And then the last one, I would say maybe retest this. I know it's not making contact, but that. What if the market is looking to retest this level and bring CCJ, when it finally makes a downtrend, I'll put an angle probably back to the $40 level. And if it goes to that $40 level after coming in spiking 50, this thing could officially dump. Let me see, 1.18. And they're expecting to return more money to shareholders than expected. They're expecting more revenue from quarter over quarter. They missed it here, but they missed it by barely. No, actually, they missed it by a lot. So they went to negative EPS to positive EPS. Yeah, as long as this thing gives a positive EPS and it's higher than this 236 that was reported on this quarter, I would say this thing's probably going to give you another jump. That's where that kind of comes in. If it does not, when this is equivalent to February, I would say do not invest into CCJ unless you get a key pullback or you wait to after their earnings call. Their earnings call is going to be somewhere around the first week, second week of February. Be patient. Allow the market to come to your level, get the best price, and then take that jump up. All right. Last one, Affirm. Appreciate you, Hitchcock. Let's see how. I'm about to put Hitchcock. Affirm. There we go. I won't say crazy. You know what was crazy for Affirm? That was crazy. This whole entire over here. But this right here, I think this is exhaustion of selling. People are taking profits after short selling it for so long. It did get beat up quite a bit on speculation. Actually, let me come back to this. Affirm's business model is designed in the climate of good cash flow and positive inflation, positive money in the money supply. We're in high interest rates and constriction of that money supply. So buying is not an option because they can't make the payment to this, pay in advance. And I felt like when they had that first run up, it was like, well, since there's going to be a credit crunch, this should be a good play, so that way people are going to use this instead of using their credit cards. But their interest rates, unless you do the four, I think it is like for the first four, you get to pay zero interest. That's the only thing. But if you're not making money and you don't have your job, and the only job that you had was because during Christmas we spiked up in jobs, and that's why the dollar dropped and everything else. So now you're starting to get back to your footing. I'm looking at Affirm as a Christmas rally because people were starting to get jobs. I'm looking at people going to exit this because after Christmas, people usually are on temporary jobs. They're going to start filing for unemployment. That will strengthen the dollar. And I think the first thing that could get attacked is companies like Affirm. Not saying it's going to go down, but this is one that I would say be a little cautious along the way. So let's take a deep dive into it. So its earnings is a negative EPS, negative EPS, negative EPS, negative EPS. Just, they have a track record of giving no money to shareholders. So this is more of an investment play than an actual sit back, relax, and you're going to go ahead and make money in the next hour or so. So for my traders, right, at this point, we have a nice little uptrend that happened on the daily, which is our deviations. We got one right here, kind of given by the cheat code. But then this is the one that helped with the Santa rally. There's two things that can happen here. It could be a retracement, and then it comes right back to that level and bounces off of it, and then started making new highs. That would mean we would be doing something like this. That is a possibility. I'm not saying that that's going to happen here with a negative EPS type of company, and especially in the field that they actually supply to the consumer. So I don't think their revenue is going to come into play. I think that this is the first taste of a downtrend. So I'm looking at these 2 points. I'm going to call this main. Oh, actually not main. Trend line. What is it? Uptrend line, large time. Okay. I really got to clean that up. All right. So I'm thinking of a red downtrend starting to attack these uptrend. And I will not be surprised if Affirm is at $23 by May. That's just my take from being extremely bold and extremely calling this out. Let's look at the oscillators to prove my point. We're above the zero line. That means they would have to come to here, use the zero line as support, get off of here, bounce, and then break this downtrend line that's actually formed from the first couple of days that happened in December, right? If we go over to the weekly, same thing. We got ourselves what looks like a morning star type of action. There is an imbalance that's sitting right here. Could they come and fill this imbalance? Let's go ahead and just mark this out. Here's our imbalance, very bullish imbalance. Boom. And we'll mark this bullish so that way it's green. Could they come and refill this and test it? I really am looking at possibly this 50% mark, $31. If we call this, we're talking about $31 by mid-March. And that's, if they really miss earnings, you're probably going to see that really fast, right? MACD's already crossed down. Stochastic's already crossed down. We're getting the CC swing, which is already starting to pinch. We're not getting that wide open mouth like we're going to go to the top side and get into these reversal boxes. I don't see that happening. So look for a firm to be exhausted, done, and continue to this downside, especially if it breaks that upward trend line. All right. Yes, and that's what's their claim to fame. Affirm, Upstart, and just to name a few. Like, that's their look. I don't have a broker. I don't have. Oh man, Casey, now you come in. You about to make me go into overtime. All right, give me 2 tickets, Casey. I got you. Right. But Affirm, like all right, fine. Give me 3. I'll spitball it. But Affirm, like those companies, like they are designed for it to alleviate and almost like what Uber did to the dispatching industry. What Uber did, they basically said you don't need a dispatch. With AI, we can connect drivers with riders, and we know where their location, map it with the location. That's what dispatchers used to do. Hey, pick up this, and are you close to this area? Which is the best driver? So that way it can be as efficient. And like there's a lot behind it. And the AI algorithm of that is what eliminated dispatching, and that's why Uber is so efficient and relatively cost effective. I digress, because at the end of the day, if you can get a car for less than a Happy Meal, there's a problem with your whole entire model. But that's a whole nother conversation. But with this, you're talking about you're automating the loan processor, which is the person that's actually looking at your verification of employment, the risk factors of, if I hand you this money, will I get it back with the return I'm expecting so I can return it back to shareholders. It's a great design in that aspect. But after that, it's a very dangerous space when you're constricting the economy and people aren't paying bills and the debt is starting to skyrocket. How do you trust that you're going to get that money back? That's the tricky part when it's all said and done. Oh, DBX and GWRE. Okay, we're going to get into that. So I would say look at a firm. Look at this downtrend that's being formed on the daily. I know it's only 2 points. I teach my people on the floor. All you need is 2 points for it to start a trend. Now it's a strong trend when you have 3 points where they tested another time. So just keep that in mind. Just be conscious of it. If it doesn't break the uptrend line, we're probably going to break the downtrend line. All right. So let's go into it. KC got us DBX. All right. Cool. Dropbox. I know this company. Cloud storage. I really want them to kind of like advance themselves to more than cloud storage. That's a whole lot. Wow, this thing has been taking off. Did this party just start? No, it's been started for a while. Danger area, but I kind of like it. It's going to be a little risky though, Casey. I think so, because what I'm looking on this monthly, you're talking about possibly an order block sitting right here waiting to short. Lord, hold on, let me go to the daily and get my thing. There we go. Not fair value, main, monthly, of course. God, listen, I'm telling you, I am so upset on trading view, because the visibility doesn't have my months. I gotta go check it off so I can go get it. All right, so I'm looking at a order block that's sitting right here. So with that order block, and we're going right into it, I don't see a real true imbalance. So I want to see a test, and I don't want to see the price come anywhere close to here. So you have an entry at 31.96. Okay, I like it. Stop loss at 30.45. I'm kind of on the same boat with you, and a target of 33.80. I would say 34.63, but this is not your regular trade, Casey. This is, I want to see this thing probably do this in going into 2025. That's what I'm thinking is going to happen. Let's go to the daily real quick, because I think there will be some retracements. That's why I'm saying that, just because of this order block. You got a nice imbalance here. I really want to tell you, KC, to not have it go below $31, but I think I'm going to stick with your I like your setup. I like your targets. I don't want to change anything out of it. If anything, it's very marginal compared to mine's, right? 31.61 probably is a better entry than 31.96, but we'll be splitting hairs when it's all said and done. All right. GWRE. Okay, so this one, I think we talked about this one before. Guide wire. I like where it is. It came retested. Actually, Thursday was the best entry. We came in, we hit the entry at 110.05. You got 113.10. I'm saying that right now you're probably good just getting in at this point, right? Nice little retracement. They bought up the dip of below 109. It came back up to that 110 level. I'm looking for this thing to probably get to TP2 at 122. What do you have here? Yours is 128. So let's agree to 126, which will bring us to 120. I'm sorry, TP3, 126. Stop loss, you have 104, which is better than cheat codes, 101, 101.73. I would say I don't want to give this imbalance, so I'll be at 107. And yeah, I like this one for more upside. Weekly is a little tricky because they've been up here for a while, and we're coming into what looks like a block. I don't see any imbalances other than testing resistance at 126. That's the only thing I see. Monthly, We already filled the imbalance. Oops, don't want to move that. We already filled imbalances. Or they try to fill this one and continue. You might get. I'm bullish. I think I like it for it to continue. The reason why I'm looking at it from the monthly perspective, we're starting to pin the stochastic. The MACD is wide open, and when we came down, as long as it doesn't break this level and continue to make higher lows, I think you will be fine. So just mark it. Don't break the trend. That's all I would say. Let it not break the trend. Let it not break the 50 EMA with strength. Let it kind of hold this angle like this, and this thing is probably going to get to that 126. The only thing is, I don't think it's going to be super fast. I could see this happening next quarter to third quarter ish, somewhere around there. All right. That said, that is a lot of information. Y'all probably gonna have to hit rewind on the video. You're probably gonna have to take a notepad and do it all over, because this is supposed to be a 15-minute show and I went completely hammered this time. I do like some of the tickets that y'all provided. I thank every one of y'all on that. Yeah, that's all I have. So go ahead, hit the like, subscribe, and bell button down below, so that way you can be able to get the information on TradingView. Hit the rocket. The rocket actually helps the little algorithm in TradingView. Let them know I actually put some really good information. And what I'm gonna do, I'm gonna do a recap of all my previous calls and everything else, and try to like really spearhead and be like, hey, this is what I do, this is what I pointed out, blah blah blah, this is how we made it. I'm probably going to point that out. Look out for those videos. It'll be on my YouTube. Also, you don't have a trading community, click the link down below. Cheat code, we do this all the time. I'm about to go open the floor at 8 a.m. That's in like 6 minutes. Come trade with us. We trade futures. And don't forget, Instagram, Twitter, all of that's down below. And I thank every one of y'all, and I want y'all to have a great morning, my neighbors. Have a great day. Later. Oh, wrong screen. Now I got it.